For those looking to invest outside the lines, the art market provides a colorful way to add some diversification. Despite having a bit of a slow 2025, experts are pointing to 2026 as a year the industry can gain back some of that traction. For more on this, we're joined by Anita Heriot, president of the Americas at the Fine Art Group. It's good to have you joining us. Thanks so much.
Oh, it's my pleasure. So nice to meet you.
So nice to meet you as well. Before we look ahead to 2026, let's just kind of backtrack and look at 2025. Why was there a bit of a slowdown this year in the art market?
Well, just hearing what you had just said about, the oil prices and also with the S&P, what's super interesting about the art market is it's semi-uncorrelated to the stock market and to other investments. So we really saw a lag in the art market declining. So when we saw issues around inflation and potential recession, the art market was just chugging along, but we started to see kind of a regression last year, and with some rebounding in November, but it was expected.
It was expected. So for 2026, maybe even more of a rebound, do you think?
Yeah, I do. I mean, we tracking the November sales was really, really interesting. And what we saw and what we continue to see is that with baby boomers historically being the biggest buyers in world history of luxury assets, art, watches, jewelry, et cetera, they're now all trying to figure out what to do with it. And as a result of that, really interesting, fresh, and important materials coming to market. And that's very, very exciting for the art market and for the luxury market. At the same time, there's kind of a slightly renewed confidence in the economy with an interest in acquiring luxury assets. And we did see November sales significantly rebound from what they were in May, and certainly from London and Paris previous to that. So we do think there'll continue to be an upward movement in the art market and the luxury market. I think we need to use art with a big A. When we're looking at the art market, we need to also think about the jewelry market, sports memorabilia, the wine market, the car market. It is kind of one big luxury market.
Okay, that's good to know. Because, yeah, when you think art, you think of, things hanging in art galleries, not so much jewelry or anything else you just mentioned. Okay, so maybe a rebound for 2026. For people who are maybe interested in getting into this for the first time, how do you suggest they kind of get started here?
Sure. The first thing is to really understand, why are you acquiring these assets? Traditionally, what we've seen is that when the ultra wealthy, the ultra high net worth individual starts to acquire these assets, they don't have any of the guidelines for acquiring them intelligently. So you first want to ask yourself, why am I buying these things, right? Is it pretty and I want to put it on the wall? Am I looking to preserve my wealth? Or am I actually looking for ROI? Those are three very different goals with three very different methodologies and very different approach and very different budget. So that basic question is the first question you always want to ask yourself: why am I buying these assets? If in fact, and I'd say 90% of my clients and clients at the Fine Art Group are specifically looking in preserving their wealth. And that's really where we shine as a firm. We help clients understand how to buy intelligently with a focus on value. So if you're looking to preserve your wealth, that is, you take money from one bucket, your liquid assets, and you put it into an art budget, you want that money to be worth the same when you acquire it. And for that, you really need to have due diligence and discipline. Two things that are difficult in an unregulated market. So that would be the first question. If you're actually looking for ROI, that's a completely different methodology. Not only are you looking for investment opportunity with all of the due diligence around that, but you also are not hanging it in your house. It's going into tax-free storage in a place like Delaware. It's going out to exhibition with a liquidity goal of 5 to 7 years. So all very different approaches depending on your goal. Also, price point. If you're looking to preserve your wealth, you can have a lower price point, right? You can acquire something, a very significant print, for instance, at $100,000. I know that doesn't seem like a small amount, but in the art market, that is not a significant number. If you're actually looking for ROI, Typically, I'm kind of more of the Warren Buffett approach to, investment in art, which is looking at very solid companies that will have growth. It's the same with art. We call it blue chip art. And then what you're really looking for is something in the price point, the range somewhere between $1 and $3 million per piece, with a lot of careful due diligence prior to acquisition. And then you're looking to liquidate somewhere between 5 and 7 years.
I know there's a lot of money in the art market. Like you're talking about some of these price points. It's really interesting to hear you talk about that. And as you say, it's not really a regulated market. So for someone who's getting in, is there advisors that people can kind of reach out to make sure that, they're getting real pieces as well for the right price and doing things, I guess, correctly when they start out?
Honestly, it's the good, the bad, and the ugly. And I say that because it is an unregulated market. So the first thing you always want to make sure, if you are bringing in someone to advise you on acquisition, is understand what do they have to benefit from this, right? For us, our advisors are salaried. They don't receive a commission. Even that small bit of information is really important because they'll be much more willing to say, no, not a good idea. This is not a good investment. So you really want to know, how is everyone getting paid, right? And are they contracted? And then the boring stuff. Is your advisor insured, right? Do they have E&O insurance? Do they have inland marine insurance? So boring things actually matter when you're looking to kind of have some advice around acquisition. There are lots and lots of advisors, but you want to have advisors with their ultimate goal as almost like fiduciaries for you. Are they giving you honest information, lots of due diligence around investment opportunity?
So interesting. Anita Heriot, appreciate you coming on today. Thanks so much for sharing your insight, and Happy New Year.
Happy New Year and happy art market.
That's Anita Heriot, president of the Americas at the Fine Art Group.